Okay, good evening everyone. This is Miltos recording for Futex Live, and this is my weekly trading roadmap for the week starting the 2nd of February 2015. So we're going to go through a few of the event-driven risk for the week and see if there's any potential opportunities that we can trade on a daily basis. So, firstly, just going to go through some of the weekend news. In Greece, on Friday, we had the Greek Finman Yannis Varoufakis. He said that Greece would turn its back on the bailout program, which led to a pretty sharp surge in Greek bond yields. But over the weekend, the Prime Minister Alexis Tsipras has said that Greece will pay its creditors. So this could cause a bit of a relief sell-off in the Greek bond yields. Something to keep your eye on. Possibly could impose a few risk-on flows, but it's kind of a mixed batch of news because if we look at China, we actually got the manufacturing PMIs, which came out at 49.8 versus the 50.2 expected, which in theory now this PMI technically puts China with a contractionary view. The non-manufacturing PMI came in at 53.7, which is slightly lower than last month's, but this could spark some risk-off flows in the Asian session. So what I would be looking at, don't have a chart of it up, but would be looking at copper to see if there's any reaction to that. Again, copper, the Aussie dollar, if there's a sell-off in that as well. Those are the kind of markets you want to be looking at as barometers for that. So interesting figure, would be worth looking at how Asia reacts to that. So looking at some of the data points from Monday, we've got the HSBC manufacturing PMI, which is a final reading. That was also contractionary, as we saw in the advance. So would be interesting to see if that gets confirmed. A more important figure, the US PCE core, year-on-year expected at 1.3%. So I would be interested to see if there is any tick up in this. Obviously, at the moment, global inflation at the minute is very subdued and on a downward path and a downward trend. So if we do see any tick up in that, that could see some reversal in some of the trends we've seen so far. We also have the ISM manufacturing. From a central bank policy perspective, we've got a lot of ECB speakers. As you can see, ECB's Kur, which is leading Dove, Nowotny leading Hawk, Costa a Dove, Yazbek, and Liikanen, which is a leaning Hawk. Interesting market structure to be looking at. I think I'm going to look at this one just a little bit more in depth than some of the other markets. And I'm going to cover it just from Monday's perspective. Looking at the Euro Stoxx 50, very interesting here. If we just get that into a smaller time, yeah, there we go. So this is a daily chart of the Euro Stoxx 50. You can see we've got a double inside day right in here. So a lot of coiling, a lot of pressure building up in this market right in here, just between 33.31 and 33.98, which are the inside day high and low. So a lot of coiling, a lot of pressure. Obviously, we've seen this rapid move up into this area. So a bit of consolidation forming here, just above this larger time frame structure. And if we just bring that up on a larger time frame, which is the weekly, you can see last week we posted a sort of weak structure, so we kind of pierced the last week's high, came back inside, and we've posted a bit of a weak candle. But if we take this into context, we've broken out of this bigger structure. You see this triangular structure in here. I would be expecting, if we did get any pushes through this area, and I'm looking very keenly at these 3309s, as you can see here, previous high made here, and also a weekly low now. So looking at this area very, very keenly, and I'll also show you why on a market profile perspective. But just to keep this in mind, if we do kind of get a sell-off in here, I would be expecting, or looking for at least, some buying pressure coming into this high at 32.82, which is also this trend line resistance turn support, I would expect. And here we get a bit of buying action. So if we take a look on a market profile structure to see um, potentially how we can uh, view the market price action and take it into context. This is last week's value area. So that goes from 33.98 down to 33.44. So if we take that into context, if the market it's basically closed around this handle here, just above these 33.30s. If we take that into context, if the market cannot actually pierce and hold above this area, well then there is scope for this to break through the inside days that we have here, which as we noted, we're at 33.30s or 31, I believe. So that could be a good little hint or clue as to if the market is willing to make that pierce to the downside. Now, if it does make that move, it would be interesting to see if we get any follow through. Now, obviously, looking at these 33.09s that I mentioned, which was a swing high, it's also a weekly value area high. So that's quite interesting to note, because if we do start seeing an offer below here, and it does actually hold. Obviously, we noted that 33.82 is really the area we want to be looking at for support, but we could see some selling pressure through there. Now, if we can't actually hold below those 33.82s and we kind of false break into this value area and pierce back above, I would expect a lot of fresh shorts to be squeezed out very viciously. So that could be interesting setup. Now, on the contrary, we might not even break down. We could just pierce back into this value and just vacuum up to the other side. But interesting to note the plays that we have to the downside. Now, the context of this market is obviously very bullish, fundamentally, technically. So bear that in mind. You want to be playing with the the most recent short to medium term trend that we've seen. Looking at Tuesday, nothing really in terms of data points. I haven't jotted down any of, there's not really anything market moving in terms of data points. We do have the Fed's Bullard speaking at 3 o'clock UK time, and the Fed's Kosh Lakota at a 4:45. So Bullard being a non-voter and a leaning hawk, Kosh Lakota non-voter, but a dove. So it would be interesting if we do get, regarding the readings we get on the PCE cores, if they make any comments on that, if we do get a tick up, possibly if Kosh Lakota, he's the dove here really, so if he does make any changes in his stance, even though they're both non-voters, they have moved the market in previous events where they've said things. So it would be very important to kind of look at those two speakers and see if they give us any indication on Fed's policy. Looking at this market now, obviously the further we go down into the week, these market structures probably won't be as I'm showing you right now, but I'm just showing you as and when we go along what could be of relevance. Looking at the E-mini S&P 500, this is very interesting chart structure. I've got this up on a weekly time frame at the minute. So as you can see, this whole month in here, this is one whole month starting from this candle right here. This whole month is within the month in here. So we have an inside month at the minute, a lot of coiling, a lot of pressure. If you take this into context, the market opened up somewhere in here, well, basically there, and we've come quite a bit lower just on this first month of the year. Now, if I'm not mistaken, the last two times I think we saw this was in 2000 and 2008. I read that somewhere recently, or I haven't actually done the research on that, but I did read that recently. You'd be worth probably taking a look at that yourselves. So keeping that keeping that in mind, really, if we do start seeing a continuation of this trend, now obviously Europe being very strong, the US a lot weaker, it's going to be interesting to see how that dynamic unfolds. If we had strong EU sessions and then weaker US sessions, I mean, we've seen the US, breaking new lows, as in the S&Ps, the Nasdaqs, the Dows breaking new lows, and the EU markets, the Euro stocks, your DAXs, your CACs, they're not actually just holding a bid, not even really moving at all. So it could be quite interesting to see if that spread just continues to widen. But from a market structure point of view, we've got this um, pretty interesting levels around 1982, 1981 and a quarter actually for the cash session is the inside month lows. But if you take it from just the futures 24-hour session, we've got this level here that's quite important at 70 and a quarter. If you take this into consideration, up here we're building this sort of head and shoulders pattern. Now I don't want to preempt it too much, but it looks like we might be building a left shoulder in here, possibly a larger head in here. And now if the price action continues to remain, we could see this market continuing. Now I don't want to come into the next month or next week with a bias. It just seems to me as if there's been some pretty bearish price action just on the spoon. A lot of volatility near these highs, something to be wary of. On the contrary, if we do break and cannot hold an offer below here and bid back up, I would expect this market kind of zoom back into value. These areas are going to be very, very key. These 2062 and a half right in here, so key. We've got these two highs just posted there on a weekly. If we do start building volume and value up in here, there could be a lot of scope for this to just really make a very swift move to the upside and catch all these shorts out. Moving on to Wednesday, some of the key data points: European Services PMI, they're all final readings. So we won't expect them to be too market moving, but just keep an eye on that. US ADP employment expected at 220K. We've seen employment numbers kind of gradually lose their importance, and it seems like their shelf life is coming to an end slowly but surely. It seems that these employment numbers are a little bit more noisy than they used to be. We're not really sparking any trends. Again, something to keep an eye on. It does spark volatility, but not necessarily in market trends. But again, that does give us the pre-context to the non-farm payrolls on Friday. ISM non-manufacturing expected 56.5 also on that day. And from a central bank policy perspective, we've got Fed's Powell and Fed's Mester speaking. If we look at some of the market structures, the euro dollar also having a bit of a coiling action, just like some of the other markets we saw previously. It would be very interesting to look at this market, because if you actually take this from the day we had the ECB decision, and you take a fib and draw this all the way down to the nearest swing low at 111.02, we came off this 61.8 just in here. Now, what's really interesting is because I think, as I've noted, and a few other traders that a few techs have noted recently, obviously we've had this massive sell-off in the euro dollar. We've just had the actual fact of QE. We had the rumor of QE going on for almost a year now. Now, is it something absurd to think that possibly investors might be taking some of their chips off the table? Could be. Not saying to go into this week with a bias, but I wouldn't be surprised if we start having a bid through these inside day highs at 1368s right in here, and we start challenging this swing high right in here. Well, all these fresh retail shorts that have come into the market just waiting for that really safe trade, well, they might be forced to cover very rapidly and aggressively. So very keen to see the reaction if the market does start bidding up into really uncomfortable territory. We have had this bid up, a reaction there, but it's not really the reaction you want to see. You'd prefer to see this market actually, once it's hit its fib, to come down and give more pressure towards the recent swing low, and given this very bearish context. So I would say keep an eye on the price action if we do get a bid up. On the contrary, if we do get a bid down or an offer down through these 112.81s, this inside day low, and continue that offer, there's really nothing holding this back from testing this recent swing low at 111.02. So again, nice little market structure to be keeping your eye on. I wouldn't expect this to hold all the way into Wednesday, but I just thought I'll throw a chart in on every day of the week, just so we can have something to talk about. On Thursday, German factory orders, not particularly market moving. Eurozone retail sales, and the U.S. initial jobless claims, which we get every week. From a central bank policy perspective, we've got the BOE rate decision. No expectation for a rate hike or any sort of expectations of anything. We've seen this kind of be and we're expecting this to be kind of a non-event for at least the next 5 to 6 months. So nothing really to be looking at there. If anything happens, that'd be an absolute outlier. So not really worth talking about. So Fed's Rosengren, ECB's Pret, and ECB's not also speaking on Thursday. If we look at a market structure, um, I'm going to take the Bund now, just to put this into perspective, and I want to show this with another chart that obviously we've pointed out. It's quite important. But if we look, obviously this market's just been very, very, very firm. We've had this was the move into the ECB. We had the flick down, quick bid caught at 156, just completely reversed this, and ever since then it's just been bid all the way through. We had a really nice setup last week, this little inside day, which false broke to the downside and then closed very, very strong. The inside day that we had on Thursday was broken on Friday, and into month ends we had a very, very strong reaction. So closing the week extremely strong, the Bund again. But what I'd like to point out, I'm not really looking at any particular market structures here, but given the context, let's just look at another chart, the Eurozone 5-year inflation-linked swaps, which are basically a barometer of the medium-term inflation expectations in the Eurozone. Now, what's interesting to know is that after we made this low here, 148.37, this market had a pretty strong bid all the way into the 22nd. 22nd is right in here, this high at 173.89 if I'm not mistaken, and that couldn't actually sustain a bid through this swing. We had a swing low here and also another swing high here, so that's a pretty key little level in here. We'd probably keep an eye on this level just to see how we react if we get back up here. But what's interesting is even after the ECB we had this sharp sell-off in this market again, which coincides with this very aggressive bid we're getting in the core fixed income markets, namely the Bund. I mean, the Bund has been very bid, even though we had a larger than expected QE program that was announced. The inflation expectations haven't really gone anywhere. So this just goes to show that this is going to be your litmus test going forward. Just keep an eye on this market. For those of you that do have Reuters, or someone that you have next to you that has Reuters, you know, pull a chart up of this every now and then. Just keep your eye on it. See if it does make any sort of move. I mean, if we're building in a little swing low in here, and this market does come up and contend with this area, well then I'd keep an eye, a very close eye on your Bunds, on your OATs, and any of those markets that are very highly correlated to inflation expectations. So if we do continue maybe this bid to the upside, we've got this little bit of a reversal pattern here. I'm not quite sure if it can sustain it. It hasn't really shown any evidence of it yet. I'm just saying if. If we don't, however, and we do continue and take out this low, well, then the Bund really should continue its uptrend. We're currently trading just above, I believe, was it 33 basis points, 31 basis points, something extremely low, and actually checked, but very, very low on yield. Come Friday, we've got obviously the event of the week. The U.S. non-farm payroll is expected at 231K. And the U.S. average hourly earnings expected at 0.3%. That is really the most important number out of these three figures. And also the U.S. unemployment rate expected at 5.6% on Friday. So really, you want to be looking at this measure rate. Last month we had a pretty low reading, less than expected. Now, again, if we have another one that's lower than expected, we could see very similar market moves. The jobs numbers have been very strong, but we haven't actually seen that kick in wage inflation, which is really what you want to see to get actual inflation. A market to be looking pretty close at. I checked this out, or I showed this chart to you guys last week, and this is a chart of the U.S. five-year T-note. Really interesting kind of chart pattern, and we were looking a lot at this for a while. We saw this a lot of coiling in this market in here. We had this break outside of it. We pushed back inside but couldn't sustain it. We've the yields have plummeted since then. Last week we noted, and I'll zoom in again just to show you, we noted that we had this inside week last week, or sorry, the week before that we had the inside week. Coming into last week, we noted that, and we actually broke lower. This is the first time we're closing below this pretty key area, this 122 6 or 123% yield level. So we're closed below that. So at the minute, this market does have quite a bit of scope to revisit just below these 1% yields, or these 0.921% yields. That's the next real support in yields. So as it stands, this is how this market is set up. Again, if we do kind of find a bid, or sorry, an offer in the market, and the yield actually does pop above this area, well, maybe we have an argument to say that there is still a not a bearish bias, but we could see that the market kind of unwinds this recent pricing in. But as it stands, the contest of this market is very bullish and bearish on yields. So just again, keep an eye on how this reacts here. Also, the T-notes are looking fairly bullish at the minute. Just looking at some of the the risk and money management plan that we have for this week. So we've got two event-driven risks on Monday, pretty high relevance considering we've got the PC cores. So I've put in a 20% risk allocation. Tuesday, 1. So medium, I've given it 15. Same with Wednesday, nothing really on high relevance. Thursday, put in 20% risk allocation, and for Friday, 30%, just because non-farm payrolls is so volatile. And for us, day traders, that's where we can make a large sum of our money if we're very careful with our money, and we take those trades. We can take a number of different trades instead of trying to look for that big winner. Those those non-farm payrolls figures, some people don't necessarily like trading them. In my opinion, I think it's a great opportunity if you know how to scalp the market and keep very flexible. That is the key to trading non-farm payrolls, is flexibility and keeping your money management plan in place. So that was my weekly roadmap for this week. Thanks a lot, guys, for listening. Hope you guys have a great week in trading, and take it easy.